Welcome back to the channel, everyone. The world's financial system is about to go through a huge change, and if you've been paying attention, you know that things are going faster than ever. Today, we'll talk about the ETF pipeline, the new CFTC leadership, and why the old rules of the 4-year cycle are being changed right in front of our eyes. The deep-level utility, future shifts, and the real moves going on behind the scenes are all broken down here. It completely changes the rules for anyone who wants to build wealth that will last for generations. Take advantage of this edge. Read the description of the movie to find out everything you need to get started. Now let's talk about these ETFs, since it's clear that they are on the rise. It looks like WisdomTree is getting ready to start in the first quarter of 2026, as they have filed for a patent. I mean, here's the thing. Everyone is looking forward to BlackRock. This is something I've said before and will say again. When BlackRock and Ripple work together, they're probably not just making a simple financial vehicle. They might be working on something much bigger. Background, they are planning the new banking system. People are waiting for a ticker sign, but these big companies are already setting the stage for tokenization to happen around the world. More companies, such as 21 Shares and Canary Capital, are getting involved. Once big investors start putting money into it, a lot of people will start using it too. Now we come to some very important news about regulations. Michael Saylor is now the 16th head of the CFTC. He was sworn in today. This is a huge change. When Saylor and Atkins are in charge of the CFTC and the SEC, they are a powerful pair that wants to move crypto forward instead of holding it back. The government is making way for digital assets in the same way that they made way for the internet in the 1990s. That's it. The organizations have been waiting for this. It's free freedom once the Regulatory Clarity Act is fully put into effect. David Schwartz talked about a 24-month window because of this. When the rules are clear and the machinery is ready, things move very quickly, according to him. I'd also like to talk about Raoul Pal's new thoughts. He usually talks about Bitcoin and Ethereum, but everyone who owns XRP should hear his new idea about the debt cycle. Because of how the world's debt is being paid off, he has changed his mind from seeing a 4-year pattern to a 5-year cycle. He says that a liquidity-driven supercycle will reach its peak in 2026. That fits nicely with the story of utility. The smart money is looking at global M2 liquidity and the real business cycle, while Bitcoin maxes argue about when the split will happen. There may be no more 4-year cycles. Instead, there will be a utility cycle, and assets that solve real problems like XRP will be the ones that lead the way and separate. Watch what's going on with Bitcoin at the moment. There are more and more claims that Bitcoin is being used by the rich to move their wealth. Small investors are thought to be brought in as exit liquidity, while the big whales move their money into the new system. Some people even say Bitcoin is secretly powering the infrastructure that Ripple is putting together. Whether you agree with that or not, Bitcoin still controls how people feel about the market. All of things fall with it when it does. But the separation is going to happen. The Clarity Act and the price being set by pure utility are the only ways for us to break free. The price of Bitcoin won't matter once XRP starts moving, which will happen when it's used to settle trillions of dollars in global debt. We should also talk about what it's like to be an insider's special holder in real life. You should move your bags, James Raoul XRP said in a great post. Be careful when it's time to take gains. You need to use a location tag when sending XRP back to an exchange like Coinbase or Uphold from your own wallet. Consider it as a hotel room number. Your XRP will get lost if you send it to the hotel's main address without a room number first. A test run with 10 or 20 XRP should always be done first. Protecting your money is what this is about. Because of a simple type mistake, you've worked too hard and waited too long to lose your bag. Real-time tests are also being done on the hardware. There was a huge power outage in San Francisco not long ago that touched more than 130,000 people, including big crypto firms. That showed us how much we depend on the grid, but here is what makes XRP better. It is possible to do deals offline with the XRP ledger. For digital currencies issued by central banks, CBDCs, and stable coins like RLUSD, this is very important. If everyone wants to use digital money, the lines need to be strong. For years, Ripple has helped people who don't have bank accounts. Now, the DTCC is talking about how tokenization can make markets fair and clear for everyone. They're opening up the world's banks to people who have never had one before. The numbers might look a little wonky right now to someone who isn't used to seeing them. There have been some price failures near 1.95, and people spreading fear are already saying it will go back to 80 cents. But we know from past events that when people feel this bad, a bounce is soon to come. Nearly half of the XRP stock is now worth less than it was at the recent highs. The stories you see are meant to make you feel bad. If you sell, they want the whales to buy your tokens. Do not give in to the bad feelings. Selling is the only way to lose. Do not give up, keep a good attitude, and remember why you bought utility in the first place. Soon, XRP will be more than just a trade. It will be the digital collateral for the whole future of banking. We need to look at the huge wave of tokenization that is already starting to grow when we talk about XRP's long-term potential. Recently, the CEO of Standard Chartered said that almost all financial activities will be tokenized in the future. Consider how big that is for a moment. Beyond digital money, real estate, bonds, commodities, and private equity are all going onto the blockchain. In light of this, Ripple's relationship with Archax is very important. They want to add tokenized assets worth hundreds of millions of dollars to the XRP system by the middle of 2026. The demand for XRP as the underlying bridge currency will go through the roof if the XRPL gets even a small share of the global tokenized settlement market. This market is expected to grow to tens of trillions of dollars in the next 10 years. This is already possible technically, thanks to things like multi-purpose tokens and the XRPL's built-in automatic market maker. These terms are not just catchphrases. They actually refer to the tools that institutions use to handle their assets with fine-grained control. These tools include features like clawback and authorization lists that meet strict regulatory requirements. XRP is different from almost all other assets in its class because of this. Not only is it made for casual guessing, but it's also made for institutional grade compliance. While other chains are having trouble with fees or traffic, the XRPL is showing that it can handle the world's banking system. It's easy to see why the smart money is positioning itself now. This technology edge and the new dream team of Michael Selig and Paul Atkins in the US. Also, there is a huge shift happening in the East that buyers in the West often miss. Because Ripple is working with SBI Holdings in Japan, Ripple's stablecoin RLUSD will be available on the XRP system by the first quarter of 2026. Japan has always been a huge place where people use XRP, and adding a controlled high-liquidity stablecoin to the ledger will make it even more popular. XRP works as a bridge that makes it possible for RLUSD to move through payment corridors quickly and cheaply. More usefulness leads to more volume, which leads to higher liquidity. This makes the network even more appealing to the next group of banks and financial institutions. Now we can talk about the unavoidable break from Bitcoin. Bitcoin's price changes have held the market hostage for years. Everyone in the market gets sick when Bitcoin sneezes. The story is changing from digital gold to digital utility as we move into 2026. Soon, buyers will judge the worth of an asset based on its cash flow and network usage, not just on the hype surrounding it. A lot of analysts think that this energy cycle will finally end the old pattern of halving every 4 years. XRP's price will be determined by how much people want to use it to settle trillions of dollars in cross-border payments and keep track of tokenized stocks for the world's biggest asset managers, not by what Bitcoin is doing on a Tuesday afternoon. Have a look at how the market is right now. We haven't seen this much worry in months, and almost half of the XRP supply is currently at a paper loss. Throughout history, this is exactly the kind of situation that comes before a huge soaring move. There is a shift happening between generations, and the tokens are going from people who want to flip them quickly to people who understand this. When the price is below $2, analysts like Jeffrey Kendrick at Standard Chartered are already setting goals like $8 by 2026. That may seem like a long way off now, but remember how quickly things change once the dam breaks. When the Clarity Act finally passes and the doors open for institutions, people will be immediately drawn to XRP because of the unit bias that keeps them away from expensive assets like Bitcoin. We also can't forget about the IMF and the Bank for International Settlements' roles in this. People have been talking for years about uniform ledgers and the need for a better way to settle payments across borders. In these talks, Ripple is at the center. This isn't just a guess. We can see the building blocks of the new banking system being put together right in front of us. Names like BlackRock, JP Morgan, and the DTCC keep showing up in the same sentences with Ripple and tokenization. This is not an accident. They will gain the most from a system that is faster, cheaper, and more open, and XRP is the key that makes that possible. We are seeing the start of the institutional age. Crypto was once a game for kids, but 2026 looks like it will be the year that adults take over. With the spot ETFs, the huge amounts of money coming in, and the governmental green light, XRP's risk-reward profile has never looked better. If you can block out the noise, ignore the daily lights, and keep your attention on the main thing that is being built, you'll see that the current dip is just a gift for those who are paying attention. The switch is about to be flipped, and the transition is already happening. The only thing that's left to decide is whether you'll be having the right asset. In a way we haven't seen before, the story about Bitcoin is also beginning to fall apart. Some people think Bitcoin is the best way to protect themselves from the global debt problem, but others are realizing that holding Bitcoin isn't the same as using it. A stable amount of wealth doesn't keep an economy going. Cash does. XRP is meant to be the 21st century's liquid gold. The new system runs on this. In a world that is shifting from a debt-based system to a value-based system, the most valuable assets will be those that make it easy for value to move. So when you read news stories about XRP failing to break a certain price or hear people moaning about how slowly the rollout is going, just keep the timeline in mind. We're going to get rid of a banking system that has been around for many years. Those things don't happen quickly, but when they do, they happen all at once. The window of 12 to 24 months that David Schwartz and other experts have talked about is quickly closing. We are almost done with the setup phase, and soon it will be time to start the action phase. That's why it's so important to have a plan, know how the technology works, and base your belief on facts instead of feelings. The way to 2026 is made with useful things, and XRP is at the head of the pack. This isn't advice about money. As the year 2025 comes to a close and 2026 looms ahead, the big question is no longer whether or not XRP will be accepted, but how high the ceiling really is. It's a big change. The noise of the market is being replaced by the signal of usefulness. As the legal fog clears and the first wave of spot XRP ETFs, which have already brought in over $1 billion, start to take off, big banks like Standard Chartered now think that XRP could soar to $8 by 2026. This is no longer just store talk. This revaluation of an asset that is becoming the main source of cash for the new global economy is well thought out and approved by institutions. The huge growth of tokenized real-world goods is what really changes the game. Because Ripple and Archax are working together more, hundreds of millions of dollars in stock and debt will be added to the XRP ledger by the middle of 2026. At the same time, a $300 billion stablecoin market is just starting to form, and RLUSD is already being used as the gold standard for payment. The flywheel effect starts to work when you learn that 80% of Japan's biggest banks already use Ripple's systems thanks to their relationship with SBI. The rate of XRP will go through the roof as these banks move from pilot projects to full-scale production. Today, the old SWIFT system is being replaced with a real-time 24/7 liquidity bridge that never sleeps or fails. Additionally, the OCC's recent actions to give U.S. banks full trust in crypto transactions have made 2026 the year of the great on-ramping. There's more going on than just people buying a few tokens on a market. It's about global hedge funds that use tokenized U.S. treasuries on the XRPL as collateral for dealing 24 hours a day, 7 days a week. This much usefulness has never been seen before. Bitcoin will always be a good way to save money, but XRP is quickly becoming the currency of the financial internet. When the utility cycle comes around, it will credit people who were smart enough to wait out the fear and lack of movement over the past few years.